My name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. And I'm going to show you two possible trades you could have took today in two different time frames, the 1 minute and the 5 minute on the SPX. So we've got the 1 minute right out of the gate. And I called this trade out. We had tweezer bottom. This is on the 1 minute. Tweezer bottom, breakout, double top, pull back, higher low, boom, to the 100 EMA. So that was this morning's first trade. And then I called it again. Once you hit that moving averages and you double topped, triple top, you could get out of the trade. So it started pulling back again and we had another snake. This is on the 1 minute. You got a triple top, failure. There's your snake. You got your breakout. Then you had your triple bottom right here with an inverse head and shoulders, and you had this hammer. So when it came out, broke down and created that head, it lined up right with that right shoulder, and I called this hammer out right here. Broke out, came back, pulled back, created a symmetrical flag. So I always tell people, don't rush like I do and get into a trade. Wait for the setup of the pattern that forms after it breaks out of the trend. And we had a symmetrical flag. Now if you're able to count to 3, you can trade with me. And if you can count to 4, you just might make a little bit more. So you're breaking out of the snake with a symmetrical flag. You have a 1, 2, 3 top and a 1, 2, 3, 4 bottom. I called this right at the peak of the squeeze. Now when I'm looking at a squeeze on a symmetrical flag, I like to see this lower bar at a higher angle, which makes me feel more bullish about the trade. As this closes up to a horizontal line, that turns into an ascending triangle. So the closer to the ascending triangle, the stronger the flag. Then it breaks out and you jump out of the trade. Called it again on the dip, right off the right shoulder of this head and shoulders. The second dip right out of that there, pullback. Boom, back to the 200, another scalp. Now on the 5 minute, so I had 3 or 4 trades in that one. This was interesting also on the 5 minute. Not every day is going to be like this, I don't think, but right at open, 20 minutes into the day, we had tweezer bottoms. We had a solid support, so I called this trade out. Inverted hammer, bullish, boom, to the 21. Then we pulled back again. I called this one out. This was 6 minutes in a row of consolidation, right up to the 50 SMA. 5 minute. That one right there and that one right there. So I got 2 trades out of it. I got 4 trades out of the 1 minute. So I made double or maybe triple of what I would have made on the 5 minute. So I'm just going back and forth on these time frames to kind of show you the difference between the two. And that's it. A couple neat trades on the SPX this morning. I traded every single day for the past 3 years. And the SPY and the IWM, I'm starting to kind of just monitor. Same as the QQQ. But when the market's in a correction, this is one thing that I want you to look for. And we'll go to, I'm just going to use Netflix as an example, but it didn't work. So this is an added lesson when you're in a market correction. See if they bounce off the 200 SMA, EMA, which it did right here, and then the 100 EMA, which it did right here. These are all three major support levels off the weekly, and we failed that. So, you know, this was one of the biggest pumps on Wall Street. It ran up 1,200%, and then it had a split, and it's just, everybody's lost interest in it. So go back to your time frames and look at that weekly and daily time frame of them three moving averages. The 100 EMA, the 200 EMA, and the 200 SMA. And you'll see if you get any supports off these here. If it doesn't gain respect above the two, I don't like Netflix. I haven't watched a movie in years. I think it's wasted 2.5, 3 hours of my life. I could be doing something a little bit more productive. So, I haven't had a TV in my house for 5 years. And that's it. This is the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now.